Every week, IG puts together a trade of the week based on some of the technicals. Last week, Chris chose to go short gold. Well, Josh is with us now with analysis of that trade before we get onto his trade of the week to watch. Interesting week, of course, as we now know, for gold. But Chris chose to go short. What were the technicals behind that decision?
Yeah, certainly. I mean, look, if you look at the chart itself, you can see that we're creating lower highs. We're also starting to see lower lows with this break through the support zone around about 1187. We see that strong move lower. Once we saw the rally into trendline resistance and respect of that, you can see it started rolling over. So certainly at the point where Chris made his trade, there was a possibility of this period of consolidation leading to another move towards the downside. That's not how it played out. Ultimately, we saw consolidation pretty much for the most of the week, and then the back end of it, this real sharp rally, and clearly a rally through 1214, which is where Chris's stop was. But certainly for me, this looks like we could potentially have marked a significant bottom for the time being, and this could be the beginning of a period of upside for gold.
Well, of course, that leads neatly into something I know you're going to talk about now, and that is your trade of the week, which is the complete opposite of what Chris was doing this time last week.
Yeah, exactly. I mean, I tried to avoid doing this. I don't necessarily like flipping positions. I mean, obviously, it was Chris's trade of the week. You know, it also depends on, certain key levels, if broken, tell you something about a market. And like I said, this is the daily time frame. We can see significant downside for, what is around about 6 months. We now seem to have formed a bottom. You can see that we have got this descending trend line that held up. We then saw this period of consolidation where we were either going to see a retracement of this move, or we're going to see it roll over in its entirety. Now that we've broken through 1214, it means we've got this higher low set. We've also got the higher high in play. So I do think we're likely to see further upside coming into play here. I think, the backdrop to some of these gold moves are born out of the fact that we're seeing borrowing costs over in the US rise, with the fact that we're seeing treasury yields moving towards the upside. We're also seeing massive debt over in the US. We're seeing issues in terms of the Italian side of things as well. So that story is certainly building at the moment, and it's moving gold back into that safe haven play. In the past, when we've seen markets selling off, people moving into the US dollar. Now we're seeing markets selling off and the US dollar is selling off. I think that brings back gold as having a role to play as a safe haven for markets. So certainly, we're seeing a strong day today. I think we're likely to see a period of upside, and hopefully, if at least we retrace some of, or a decent amount of, this significant sell-off that we've had from the peak that we had around about 1365.
So on your price targets then, where do you think this move is likely to take us? And of course, the second point of that is, if you put a long trade on at this level, where would you put your stop? Yeah,
so if we look at this market here, I mean, this is the weekly time frame, right? And we can see, firstly, we have this creation of higher highs and flatlining highs and higher lows. The fact that we broke through what could be perceived as a trend line, didn't necessarily say that this market's completely done and dusted, because of course we only had 2 touches. So if we just take it from this wider context, we can say we're still trading to a large extent in a triangle formation, in that we're seeing higher lows on these wider swings and flatlining tops. So there is a possibility that we could come back into this resistance area, the lower peak being around about 1357, the top end being 1375. That's substantially higher from where we are, of course, and certainly we are somewhere in the middle of this in terms of momentum. I do think we're likely to still be able to have a substantial amount left in the tank. So one side of the target kind of area is the potential to come back into this area of resistance. Another side is for us to look at this current move as a retracement and look at it from that perspective. The 61.8 is at 1287. The 76.4 is 1317. So there's still substantial upside, I think, to come for this market. I think we've only just really seen the confirmation signal over the last couple of days, trading days, that this actually has bottomed out for the time being. So we've seen 3 weeks in a row of upside, but if you saw the way down, we saw week after week after week of losses. I think there's a good chance we could start moving into a more bullish phase. So significant upside to come. Now this is the 4-hour chart, and so if we're looking at where we'd want to put our stop, we have of course seen this sort of strong move towards the upside over the past couple of candles, but certainly we saw this very shallow pullback. Now these kind of shallow pullbacks generally are the kind of things when everyone wants to move in the same direction, right? When you see very deep retracements, it means there's arguments on both sides. We've seen this very shallow pullback back in towards this sort of 12-14 area, which would sort of mark the top end of this area of consolidation. And now we've leveraged higher from here. So that gives me confidence to be able to say, you know, as long as we don't break below that level, that we're going to start creating higher highs and higher lows that should play out over the coming weeks. So I'm putting my stop below 12.16. Given the fact that we had that breakout point at 12.14, I'll say my stop is at 12.13. I know it's a decent bit away from where we are at the moment. But of course, like I've alluded to on that wider time frame, if we look at 12.13 as that stop loss, and I'll just quickly draw that on here. Let's just go 12.13. There we go. It, in the grand scheme of things, doesn't necessarily look that far away, considering the fact that on this wider perspective, it looks like we could be setting ourselves up for a more protracted period of upside for gold.
Okay, all right, Josh, thanks so much indeed. That is a long gold trade for the week starting Monday, the 15th of October.